The Canadian Association of Retired Persons says seniors rely on in-branch investment advice at banks, but it warns that in doing so, they're exposed to exploitation driven by a sales culture. Let's get more from Anthony Quinn, president of the Canadian Association of Retired Persons. Anthony, thanks very much for joining us.
Good afternoon, Andrew. Happy to be here with you.
So as far as I can see, the core of your concerns here is the mutual funds that are offered to seniors, in that your complaint is that seniors generally are just offered the bank's mutual funds and the bank's investment products and not rival products, not a full selection.
Well, this is based on a report from the CIRO and the Ontario Securities Commission that came out earlier or in the middle of last year. And they reported that, I'll just say 24% of their in-branch advisors sometimes recommended products that were not in their client's best interest. So that report from the OSC raised a flag with us, and we have been trying to make some noise with the regulators and legislators about that concerning report. I wrote a letter to Anthony Ostler, who is the head of the Canadian Bankers Association, and said, we would like the banks to self-regulate. This issue is affecting millions of older investors who have a very short runway to make sure they're getting the best returns on their investments. But it also affects younger investors who will have compounding lower returns when they are using these in-branch investments.
Yeah, it's interesting. I was curious. You're not just talking about seniors, but of course your job is advocating for seniors.
We advocate for seniors, but seniors are in the habit of trusting these institutions. Mm-hmm. Many of our members have been working with their banks for 50, 60 years. And when they have a portfolio of their nest egg that has been given to the banks, they're expecting the banks to be working in their best interest. And this report obviously showed that in many instances, they're not working in their clients' best interests. And we're asking the banks to take their thumb off the scale and be working with a higher fiduciary standard for those investors who come into their branches trusting their advisors.
Give us an example of where you think a senior may be not treated fairly when it comes to investments offered by a bank branch.
Sure. Let's say someone downsizes their home and they have several $100,000 now available for investment. They walk into their in-branch advisor, someone who they've trusted, or the bank branch they've trusted for decades, and they will be put into bank-owned mutual funds typically, and that is all they're going to be offered. If they happen to walk across the street to the same bank's wealth division, they would be offered the entire spectrum of mutual funds or ETFs or the things that would actually be in their best interest. So there is naturally a conflict in the bank infrastructure because they're selling the bank's own instruments exclusively, and they're being incentivized to do so. So that scorecard of the investors having to make the demands of their inter-branch advisors is a concern for our members, and they were shocked to see what the OSC reported.
The banks did get back to you. There's Canadian Bankers Association. I have a couple of points that they made back to you. They said, well, this survey was just in Ontario, and they say, well, over 70% of respondents in the bank branches said, I think the range I can recommend of funds meets their needs. That's just two of the points they made. Any comments there?
Well, I don't want to blame the investment advisors themselves. They're working within the constraints of their jobs. But when the head of the CBA says that the report was only Ontario-based, that's where all of the policies and procedures are coming from. They're emanating from Ontario across the country. And that sales culture is clear across the country when it comes to in-branch advisors. So we're looking for the banks to really regulate themselves. We're talking to the OSC, we're talking to the provincial government in Ontario, asking them to step in if need be. But it would be much better if banks could increase the trust, rebuild the trust between themselves and their clients, and do the right thing before regulators have to step in.
Now, I'm not familiar with the morass of regulation here, but I assume it would be complicated if you had in-branch employees expected to be knowledgeable about a vast range of mutual funds, not just their in-house ones.
Well, I think the expectation from anybody walking in who's speaking to an investment advisor is that they're acting in their best interest. whether they have access to every available fund in Canada or a larger amount of them. But if they're not acting in their best interest, if it's a suitability standard, as they call it, and it's suitable for the bank and suitable for you, that seems to be an unlevel playing field. And I think it's incumbent on the banks to really educate their advisors to what is actually in the client's best interest and to increase that fiduciary standard so that clients aren't just dealing with salespeople, that they're actually dealing with advisors who are working for the better outcomes for their clients.
We've only a minute left. The regulators obviously act at a glacial pace. Will some kind of self-policing really fix this problem that you perceive? I mean, because there's always going to be, unspoken pressure on a bank employee, for example.
Well, I think my goal is to get this out of the pages of the business newspaper, because this is an issue affecting Canadians on Main Street. I think the industry knows it's happening. It's very hard to get an industry that is benefiting from this relationship to change their ways, but we wanted to go right to the head of the CBA to ask them to make the changes. And then if not, we'll put pressure through grassroots advocacy to have the legislators and the legislators and the regulators make those changes if required.
Anthony, thank you very much. I really appreciate it.
Thanks for your time, Andrew.
Anthony Quinn, President of the Canadian Association of Retired Persons.